There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechnoTrader. TechnoTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.
Hi everyone, today we're going to talk about the new topping and bottoming formations that are occurring in the market. Technical analysis isn't a set system that never changes. Candlesticks, candlestick patterns, candlestick entry and exit points, trends, trend line patterns, topping formations, bottoming formations, sideways patterns, consolidations, platforms, trading range, long-term, intermediate term, and short-term sideways action. All continually change and are modified because of the new order types that 80% of the market participant groups use that are unavailable to the retail side, which constitutes only 20% or less of the daily transactions in the market today. Technical analysis continually evolves and changes. New opportunities for new types of charting analysis is becoming more and more available. Data is the most expensive commodity in the financial markets. The professional side spends thousands, tens of thousands, hundreds of thousands of dollars on current immediate data. The retail side reluctantly pays a minimal amount of data if they're using a charting software program and complains about it incessantly. You should not. You should be prepared to spend a percentage of your profits on current immediate data from a data feed provider or the original source. The original source would be the exchanges directly from the national clearinghouses. Data feed providers are those who take the information from the data feed providers and sell it to the professional side, the software companies, your retail brokers, and so on. With the retail brokers no longer charging commission rates, they have to make their money some way. And they're going to do it by using spreads. They're going to be using opportunities that they have to make a lot of money from you. So now, instead of trading on the exchanges and having the opportunity to trade with everybody else, you're going to be trading against your broker. If you do not learn the new patterns, if you don't understand the new candlestick patterns, the new candlestick formations, the new candlestick entry signals, the support and resistance and how it affects the price action for every different market participant group, identifying what candlestick represents what market participant group. I know that your retail website for your financial information tells you investors think this, investors think that. Investors did this today. They sold because they're worried about interest rates. Investors bought today because they think it's a rally going on because we're going to have the end of the trade war or whatever. And that's a false statement. First of all, there's not one market participant group. There are 9. And the majority of those, 6 of them, are on the professional side, who controls 80% of all the transactions. Now, if you don't understand the professional side and how they trade, why they trade, and how the price and candlesticks and trends are affected by what they're doing, you're going to lose money. Are you losing money right now? Are you 70 to 80% successful in every trade you make and making a lot of profit with very small losses? If you're trying to make a 40 or 50% success rate, you're going to lose your capital base. It's going to be all gone. I know this is a problem for you because your retail broker is going out of business because you're losing money and giving up. You're giving up because you haven't been given the proper education. You're giving up because you're trying to trade a strategy in a market that isn't right for that strategy. You're trading against the large lots rather than with them. You're making all these mistakes because you haven't got the proper education. And a lot of you think that you can read a few articles on the internet or watch a few webinars, listen to a couple of retail gurus, and figure it out. And a year goes by, and 2 years go by, and 5 years go by, and 10 years go by, and 15 years go by, and you're still not successful. Time is money. The sooner you have a complete methodology and trading process, the faster you will be successful, and the more money you will make. So instead of wasting 10 years of your life trying to figure it out for yourself, spend a few months and a little bit of money, and you can be successful very rapidly. Trends are changing because the professional side has new order types and new routing systems. They have the ability to strike on the penny or half penny in a millisecond. You don't. You trade on the minute scale, and a minute is an eternity in a millisecond market. In a millisecond market, the stock price can move points, several points. Point is 100 cents or $1. So while you're waiting for your fill, which may not be instantaneous, it may be, but usually it's a little delayed, gives the brokers opportunities to make money from every transaction you make. So they're going to be trying to teach you strategies that make you buy and sell and buy and sell and buy and sell and buy and sell so that they can get profits from your spreads. They can't get it from commissions because the commissions are free, but they still have to make money. They're mostly publicly traded corporations. They have to make their investors happy. They have to keep their dividends up. So they are going to be scamming you, even more than before. Trend lines. Trend line patterns are the patterns of trending action within a trend, up or down or sideways. There are 3 trends. There's the uptrend, there's the downtrend, and there's the sideways trend. There are many types of sideways price action or trends. And they're very important because the market trends sideways about 70% of the time. It doesn't move up in a strong uptrend or downtrend very often anymore, because so many of the market participants can control price in such a manner that they don't move it much. HFTs move the stocks with big runs and gains, and buybacks from corporations cause big runs and gains. And panic selling by the retail crowd causes the big downtrends. But you have to understand that there are a whole lot of new trend line patterns, and a lot of the older ones don't exist anymore or are not worth working with. There are also many new tops and many new bottom formations. Now, why is this happening? Because we're becoming a shorter and shorter term buy and sell market. There's more and more short-term trading going on. There's more active managed portfolios than passive. There's also the ETF factor. Exchange-traded funds are based on an asset base, either stocks or bonds or commodities or currencies or a derivative of a derivative, options, for instance. There are also exotic ETFs, which are based on all kinds of things that do not have assets. When you have an asset base, that base is the ETF becomes an index, and it must follow closely the action of the underlying stocks as an index. For instance, the SPY is an ETF of the S&P 500 index, which is 500 and some stocks. So the ETF SPY follows very closely the value action of the S&P 500. If the S&P 500 goes down or up quite a bit in a month, then at the end of the month, the SPY trust account has to adjust the inventory of stocks held in that trust for that ETF in order to keep it in balance value-wise to the value of the index. This creates a lot of short-term activity on a monthly scale. We're seeing more and more short-term activity going on. Long-term investors are kind of going away a little bit. ETFs are bought for more of a intermediate term, not necessarily a long-term investment. You can sell them at will at any time. A mutual fund, which is going out of favor more and more, is something that you would hold for many years and seldom sell. But as things change and modify, you have to be aware that this will alter the technical patterns that you may have grown accustomed to. Or you're reading older books on technical analysis and thinking that they tell you everything you need to know. Well, those books are older, and those technical patterns do not necessarily form or behave in the manner that those books said they did back then. Same is true of the original candlesticks. Candlestick books that were written in the 90s, candlesticks that form now are quite different. The candlestick entries and exit signals weren't available in the 90s. You had continuation and rotation patterns. But those aren't as important now as you enter a stock, because you need to enter a stock as the professionals are entering it or the dark pools are entering it, so that you're with the large lots, and as it moves up or down, you make profits with them. If you follow the continuation or reversal patterns of the candlesticks of the 90s books, then you will lose money. Why? Because you're getting in too late oftentimes for our very short-term, fast-paced market action. There are also far more smaller candles and more density to the candles in consolidations and platforms. And platform patterns, as a sideways pattern, didn't exist in the 90s. They didn't exist in the first decade of this new century. They started developing after the dark pool alternative trading systems were developed, and all of the dark pool activity, the large lot activity, moved to these hidden dark venues. Did you know that the SEC has approved that all dark pools can delay their orders until after the market closes from going to the national clearinghouses? Ergo, if you're day trading, you do not have about 40% of the data for that day at that time. That is why intraday trading and day trading is so illiquid nowadays, because the dark pool venues don't have to report to the national clearinghouses until after the market closes. Alters trends all over the place. There are so many things that have been changing in technical analysis that you need to learn, and that you have not figured out yet because no one has taught you what you need to know. There are many aspects of technical analysis that continues to change in a dramatic way. The reason why is new order types, new routing types, new exchanges, new dark pools, new kinds of ways of creating complex, not just multi-leg, but 10-leg orders that go through a variety of different financial markets, changing and altering as they go. There's a lot of machine learning going on in the professional side. There's a lot of artificial intelligence going on. There's a lot of different opportunities that are happening for the professional side that are not happening for the retail crowd. You must, at all times, understand the current activity, the current new technology, and the current way that the professionals are trading and investing the market. Otherwise, you are going to get whacked. You're going to have whipsaw trades. You're going to have all kinds of problems that you are going to have trouble understanding and are going to blame on market makers. Now, the market is completely automated. It is completely computerized. If some guru or some training company tells you that the market maker has whipsawed your stock and taken you out and they're the bad guys, they're lying to you. The market is fully automated. Computers act as market makers now. There are no human market makers sitting around trying to find your very small 100 lot order and trying to trade against you. Just doesn't happen. Didn't happen in the 90s either, but everybody believed it. 99% of the retail orders are filled by your broker. Your broker is filling your orders. Your order for a stock to buy or sell short or buy to cover, it never hits the exchanges. Your retail broker trades against you to make profits. Deal with it. The hardest thing for most retail traders is to accept the reality of the market. You must be trading with the large lots and not against them. You must enter before an HFT or avoid it altogether. You must understand the new technical patterns that tell you, is it dark pool quiet accumulation or quiet rotation? Is a professional trader setting up for HFT action? Are these candles buybacks? Are these candles HFT action? Are these candles smaller funds action? You need to know this. And the only place that you can get this information is from TechnoTrader. Why? Because right now, we're the only credentialed education company out there. Most places that you go are trying to sell you a platform or a brokerage system or a charting software system or something else. They're not simply education. We're not a broker. We don't sell charting software. We don't have a platform we're trying to sell you. All we're trying to do is give you a good, thorough, comprehensive methodology with a complete trading process that we help customize especially for you, your capital base, your needs, your goals, your trading styles, and what you want to do in the market. Do you want to swing trade? Do you want to day trade? Do you want to be an options trader? Do you want to only trade once a week? That's called position platform trading. Do you want to be a long-term investor? Each course is custom built for each student and includes exactly what you need to be consistently successful. We base this on your prior education, what you know already, incorporating what you don't know and what you need to know in the education. We back it up with the best support in the business. No company that trains or teaches has the support that we have or the credentialed individuals to help you and guide you as professionals. So, when you're ready to be a successful trader making very good income, either part-time, full-time, or as a semi-professional, come to TechnoTrader, take a look at our courses, download some outlines, get some idea of what's offered in the courses, then give us a call. We have curriculum advisors because we're a college-style educational company. We're not some guru trying to promote and recommend stocks that they already own are going to make profit in, because when you start buying, they're going to start selling. We're strictly an educational company that helps you become consistently successful so that you never have to worry about the economy again. You will be able to trade whether the economy is booming or crashing. You will be able to make money in the stock market whether everybody else is losing their jobs. You don't have to worry about it. When you become a trader, you are in control of your life, and there is always money to be made in the stock market and financial markets. I'm Martha Stokes, and that's the radio show for today.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechnoTrader. TechnoTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.